This is the December 15th, 2016 review of my positions. I'm going to start off with this NDX butterfly we've been looking at for the past few days. And if you recall, on the spike up, which was Tuesday, this was down about $5,500 or so, 5,600. And so here, just after a couple of days of relatively calm sideways action in the NDX, we've made back $1,000 already, which is it's better than what I was expecting actually. And so I'm starting to gather a little hope that it might be outside possibility chance that if NASDAQ stays within this range for a week or so, we might even be getting back close to break even, which seems pretty remarkable given the fact that I put it on at pretty much the worst possible time. I put it up as a slightly, well, I'll show you the original position. When I put it on, NASDAQ index was trading somewhere around here, so I was the middle of my expiration strikes were above the money, but the way this T+0 line works, it starts out quite a bit below the money. And so even though I had put this butterfly 50 points above the current trading price, I was really about on the center of the peak. So it was pretty neutral, pretty flat. And so the fact that NASDAQ just shot up, within just a few days, immediately sliding down this right side, was not ideal for me. That's not what I wanted to see out of this trade. So that's, I wouldn't say that it's the worst case scenario, but it's one of the worst case scenarios. And so, like I said, we're down 5,500. Now it's not so bad, and it's possible that this could turn into something decent for us. We'll look at, that's January. February is just this amalgamation of short put verticals and a short call up here, and same thing. That's not my completely accurate P&L, but we got a little bit healthier today on this position as well. So that is really nice. Didn't have to do anything to either one of these. I did nothing. Similar Russell, did nothing on Russell today. We're just sitting kind of in the middle of this on the middle of this peak hump, which is exactly what we want to do. Made about $450 today, so that's fantastic. SPX, let's look at, I guess we were looking at February 1st. This is one of the back ratios that I'm experimenting with the extra put down there. Same thing, made some money today, did absolutely nothing, still have quite a bit of distance before we would have to consider doing anything at all. So February is looking good, nothing to worry about managing. January is I'm in the middle of the peak, but we're getting a little bit shorter time duration. There are now 35 days remaining. 35 days remaining in January. I've got a naked call up here at, actually I have two naked calls up here at 2,300, which makes me slightly nervous since the market has been pretty darn strong. So I hate to have these naked calls have that exposure. And on the flip side, I do have a naked put down here at 2,200. So I've got a naked strangle here at 2,200, 2,300, which does not make me terribly comfortable given the volatility we've had lately. And the fact we usually get a Christmassy type rally. But on the other hand, with vacation coming up, a lot of people leave and the markets tend to slow down. It can go sideways. Maybe not. I don't know. That sometimes that plays out that way. There could be news, or there could just be continued optimism. Whatever's been fueling this rally continues, and S&P could break all-time highs day after day and could appear over 2,300 pretty quickly. So I don't know. I will just manage accordingly. But right now, nothing to do. But once again, we made a decent amount of money came in today. That's great. So if this makes, and I don't have a hard and fast number in mind right now, I'll be thinking about that overnight while I let the subconscious work on these things. But very soon I'm going to come up with an idea number in mind where I want to close this strangle, because I would be very, very happy just to get out of that. And then, as always, I'm watching these puts that are further away and I have orders in to take those off. So I love to close these puts that are further away, take those down, and just eliminate the possibility of the big downside reversal, bringing those back into play. Let's just close all. I made all the money I wanted to out of those. Let's close those down. Let's initiate a new position somewhere else. So that is everything I have on today. This is not a bad day. Oh, I'll show you one last position, which I haven't showed you before. Is gold. I was gonna say it was a nice easy day where I didn't have to do anything, but gold has been a bit of a challenge. So my gold position, I had a thesis that this 1200 level might be a level of support or potential place for a trade. So I actually sold a put when we were making our way down towards 1200, and it held for 3 or 4 days, and then just careened right through, and it's been trending down ever since. And so I think I initially sold a few 1120 puts, and then as it broke that level, I sold some calls to offset and get slightly short. Didn't get short enough, so I've been chasing this a little bit and kicking myself. But this is, I was looking at hindsight, but I'll tell you a little bit of the psychology I'm working on right now. Is we had a bit of a rally just a couple of days ago, back up towards this 65-70 area. And in my mind, I was thinking that would be a good place to get short again, to sell some more calls and lean this a little more bearish, anticipating further downside action. And so I did that, but I didn't sell enough calls, which, as I've talked about previously, the selling naked calls can make you nervous. So I didn't want to do too many. So what I should have done, and you can always should yourself to death, but in hindsight, what I should have done is go ahead and sell a call. That was fine. I should have bought in one of these puts and just taken off some of that downside risk and got myself a little bit shorter. And part of my reluctance to do that is because I have adopted this neutralish strategy or mindset that at all times I want to be neutral because I don't know what the market's going to do. And that works great in mean reversion type markets, but in trending markets, that it does not work at all because it's an anti-trending strategy, and in a trending market, that's no good. So I am working personally to adapt my thinking, adapt my mindset, and then to adapt the strategy to account for and allow for a more of a directional opinion and to play trend continuations. And if I had done that, even just that simple task of just closing one of these puts and eliminating some of that downside risk would have saved me several $100s and a little bit of aggravation. So sometimes if you have enough experience and you start to, whether it's you think you're seeing chart patterns or some technical indicator, or just you have an intuition or a feel for where a asymmetrical risk reward opportunity lies, when you see those, and I'm starting to have some of those after 6 years of looking at this. Where my next step is when I feel that intuition and I know it's not fear or anxiety that's giving me a sense of what might be happening, and it's actually my intuition working on what seems to be happening inside the market. Now my next step is to then account for that in my strategy and to get a bit more aggressive in one direction versus another if I think that's going to happen. And then, of course, to have a point where I'm wrong and then to manage the risk when that point. So as an example, so I did just that. I had an outright bullish position here at 1200 as we were coming down. I just sold some puts, and I was just expecting or wanting the market to just rally back up and my puts would decay, and that'd be great. In a similar way that I have on the SPX February position. But of course we went through 1200, and that was my signal to say, okay, well, my assumption has been completely invalidated. And so I could have just closed that and gotten bearish, thinking it would go continue down. But you can have false breakouts and then retesting and rallies and whatnot. So that's why I tend to first just sell the other side and neutralize out the position and give it some time to see what happens. And then as things start to continue to decline, it became a little more obvious that I needed to take more defensive action. And so all that to say is we're in this position. It's not that bad. This is not the accurate P&L, but it's not far off in this instance because I haven't had to roll too much. So that's pretty. It's maybe a few hundred dollars worse than that, but it's still amazingly, it's still a positive P&L position despite the fact that we've dropped 70 points in a couple of weeks from where I started. So that is the beauty of the option strategies. And what also helped is the day that we broke 1200 and declined pretty significantly, the volatility just exploded that day. And so I went in and I sold a couple of strangles. And so those strangles have absolutely deteriorated because the volatility came back out. And so, it would have been a beautiful day if I had waited and not put on my initial position and then noticed that volatility expansion and jumped right in then and been able to take it off. But hey, hindsight is always 2020 in this business, and it does no good to dwell on those things. You'll just drive yourself crazy. The task at hand is to manage what is in front of you. And so, as most of my other positions, I've got a decent amount of room to the upside. I've got some room to the downside. If this sell-off continues, I'm going to be closing these puts. I don't feel like rolling them much further, so I'll probably just be closing for a loss. Maybe allow some of these calls in the hopes that they bleed off a little bit, and then just hope that if we do get a move down and I close these puts, we don't get a rip roaring rally that's gonna have me lose on both sides, which is one of the drawbacks to this trading strategy. You can absolutely just feel too much pain as you slide down, slide down, slide down, say, okay, I've just got to get rid of this put and take off some of my risk. So I'm just going to close that thing and close that, and we'll just get more neutralized, and then boom, it goes back up, and now you're sliding down the other side. So you slide down and take losses, and you slide down and take losses, and you can start chasing the market, and that's a bummer. That was no fun at all, and I have been there. That's how I know that. So overall, things aren't looking so terrible. I would absolutely love to see a trading range form, and for things to slow down and people to go on vacation, and for the last couple of weeks of the year to be slow sideways days with very narrow bars that make the day traders upset and angry and cursing. Those are the days when I'm happy, because I don't have to do anything, and I just check this every couple hours, and then I go back and spend time with my family and have a nice lovely time. So that is my current positions. That is what I hope will happen. I expect it will not happen. Always hope for the best, expect the worst. So I am gearing up and expecting that tomorrow I'm going to have to come in and manage, and I will have identified levels where I know I need to do something. And thankfully right now those levels are not very close, so I don't have to worry about it too closely. So thank you again for watching. Continue to stick with us, and we will get through all these current positions and start some fresh positions, and those will make a lot more sense if you see things from the get-go. And then maybe we even talk about why we choose the positions we choose and what various possibilities are out there, and kick around some various ideas and then pick one, and then we'll just carry it all the way through live with real money and see how it performs. That's the way I like to do things. Thank you very much.